Much of the focus of the past few months has been on political events in the US, China and Europe, but we shouldn't overlook fundamental trends in the economy. This week, we'll have Mario Draghi's final fling as ECB president. Next week, it's the Fed's turn. And a week later, the Bank of England will have a decision to make amid all the noise of Brexit. So, a lot rests on two crucial aspects of the economy, growth and inflation. On those topics, let's hear from our cool heads.
We will be leaving the EU. America is winning again.
Today, we decided to lower interest rates.
Do not raise this time.
Hello and welcome to Cool Heads. In a moment, I'll be talking to Fidelity experts Ian Samson and Andrea Iannelli on their outlook. But first, Deane. Ben, what's the inflation data telling us at the moment?
Well, the inflation data is telling us quite an interesting story. So on the one hand, we have market expectations for inflation, which are relatively muted. And on the other, if we have a look at core inflation, we can see a slow but building inflationary picture over the last 4 years. And as investors, we tend to prefer core inflation as a measure because it strips out those volatile measures or components like food or energy prices. And if we think about what's happened since the financial crisis, output gaps have closed, unemployment has fallen, and ultimately that's feeding through to rising core prices.
OK, so we've got three lines there. One of them in the UK looks a bit different from the others. What's going on there?
Yeah, the UK is quite an interesting case, and ultimately this is because the UK is quite an open economy. So domestic price level changes in the UK are quite heavily influenced by sterling currency moves. And if we think what happened around sort of June 2016, the Brexit referendum, the sterling currency depreciated, and ultimately that meant that the UK started to import inflation. And as that sort of one-off effect starts to dissipate from the year-on-year rate, we see UK inflation start to trend back to its longer-term trend.
OK, thank you very much, Ben, indeed. So, we know inflation is rising in developed markets. In the UK, that's been driven by currency weakness rather than economic growth. But where do we go from here? Let's go over to macro specialist Ian Samson in Hong Kong. Ian, tell us what the forecasts look like. What's the outlook for growth and inflation around the world?
Well, there's actually scope for global growth to accelerate modestly as we go into 2020 after such an abysmal run. That's what our Fidelity leading indicator is pointing to, but it's also what the huge plunge in developed market bond yields would point to. That makes it cheaper for both businesses and consumers to borrow money. And you've got to remember that we've gone from a world where every developed market, emerging market, China were tightening policy last year to one where we're seeing across the board and in some cases material easing. That should provide a fillip to economic activity. It just takes a lag for that to actually work through the system. In terms of inflation, well, really where growth goes, core inflation tends to follow with a 12 to 18 month lag. So what you're likely to see is as we go into next year, the slowdown that we have seen will cool off inflation a little bit. But inflation is certainly not dead. As the global economy stages something of a recovery, we should see creeping upward pressure on inflation coming back in, especially given how tight labour markets are in many corners of the world and the fact that we're seeing actually quite robust wage growth everywhere from the US to the UK, even in the Eurozone now.
OK, thank you, Ian, very much. So, Andrea, we've heard about the data, we've heard about the forecasts. What are the implications of all that for investors?
Well, as investors, obviously the data matters, but what matters even more perhaps when it comes to inflation is what the market is expecting, is pricing in. Looking at measures of inflation expectations like break-evens, for example, there are actually quite pronounced differences between countries. For example, in the case of the UK, whilst UK inflation has risen on average over the last few years, the market's already ahead of that, and we do see that inflation expectations in the UK are actually pretty high. As a result of it, we are careful on the asset class, on that particular area of the market, preferring other areas, such as the US, where we have pretty much the opposite picture. The US economy is doing okay, but US inflation expectations have actually come off quite a bit. And even though inflation may be rising in the US, break-evens forecast this to average only 1.5% over the next 5 years, which is pretty low, and as a result, as investors, we see that as an opportunity.
Okay, so given that it's a mixed picture, what are the key measures that you, as an investor, are looking at?
Well, the key themes today for investors are, firstly, central banks, monetary policy. Central bankers are very much back into the driving seat, cutting rates, restarting QE, supporting the economies and markets. The big question mark going forward, though, will be whether fiscal policy will come also into play and whether governments will play their part with easier fiscal measures. If and when that happens, that can have meaningful impacts on economies, but also on markets, particularly on the inflation market.
Yeah, so fiscal policy potentially inflationary.
Yes.
Yeah, Andrea, thank you very much. And thank you to our other call heads today, Deane and Ian Samson. Next week, we'll be discussing how investors are thinking about Asia. Thanks for watching. Goodbye.